Steve Sosnick here with today's Interactive Brokers midday market update for July 14th, 2020. Happy Bastille Day to if anybody's watching in France. We're going to try this a little bit differently today. We had some early deadlines in-house, so the midday market update is actually taking place as the market opens. We had an interesting overnight session, actually. Most of the world was lower on the back of the U.S., and then for whatever reason, U.S. futures were trading higher. It's I described it in a Twitter feed, in a Twitter post, as the markets were almost hypnotized. Must go higher, must buy dips. Reflexively, we sank yesterday, must buy that dip. Well, guess what? The CPI number came out way ahead of expectation. The banks, although the earnings themselves, at least at this moment, seem fairly mixed. Wells Fargo lower, JP Morgan and Citi a little higher. Combined, these three banks are taking $28 billion in bad loan provisions. That is not the sign of a robust economy. So throw in higher inflation, higher bad loan provisions. That kind of adds up to the old boogeyman of stagflation. None of that is good. So let's see where we go. Also, yesterday was a very significant short-term trend change on Nasdaq. I alluded to it briefly on Thursday, and it never really came true, where the market races to new highs and then closes below the lower day's lows. From a candlestick pattern, it's never good. We call it an outside reversal, where you close at the lows after making new highs. I think the Japanese term, I believe, is the black maru bozo. But bottom line is, it doesn't bode well for the Nasdaq, and Nasdaq has been up on a spike, and that's kind of one of the things you might expect when markets spike higher. That when a reversal comes, it's not going to be pretty. The reason for the reversal, of course, was one of these situations that you had to see coming. A lot of it was because of bad news on the COVID front about California effectively reversing itself. I think you had to be under a rock to not think that this was a possibility, that states that are having real trouble, like California, like Florida, like Arizona, like Texas, would start to take measures to address the virus. Different states are doing it at different paces, but California threw the market for a loop yesterday, and at least as of now, the decline continues after an attempted bounce. So we'll see. One stock, of course, to keep watching is our old buddy Tesla. It was looking about $100 higher pre-opening. Now it's sort of up a little bit as we open. They got a kind of a negative ruling on some advertising. There's going to be a lot of play as we go into their earnings, and there's a lot riding on this, more than actually normal, even considering the spike that the stock has had, taking it up, call it 70% in a very short period of time. Well, it's going to center around S&P index inclusion. And one of the criteria that S&P has is you have to show GAAP, or 4 quarters in a row of GAAP profits. Tesla rarely makes money in the fourth quarter, but stranger things have happened. The market's predicting a loss. Analysts are predicting a loss. Markets, I think, are trading higher on the thought that they could get included in the S&P 500. There are some wild cards here. There's an index committee, and they could override it in either direction. On the plus side, they could say, well, it's close enough. There's an argument to be made. Tesla's such a big company, you can't ignore it anymore. Let's put it in the index. On the flip side, they can also basically realize that this would have a major distorting effect on the index. And let me explain to you why. Tesla is bigger than about 98% of the companies in the S&P 500. Odds are it's going to replace something that's got a very small index weight that's coming out. So what that would mean is, to keep yourself fully invested in the index, if you're an indexer, you have to sell the other stocks to make room for the new holding if it's much bigger than what it's replacing. If a company's going in that's the same size as the one coming out, the index funds don't really have to do much, because they basically sell one, buy the other, and it more or less works itself out from a cash flow point of view. In this situation, they have to sell everything. Well, That's great for Tesla if you have all these companies that need to buy it. It's not good for the other 499 stocks in the index if you have to sell large quantities to be able for these funds to be able to buy Tesla. Presumably what that would mean is the stock would also be spiking again. So you'd put this stock into an index that's already spiking, that would be spiking further as you've got all this demand. And so you really have double whammy potentially in terms of index underperformance, in terms of the S&P index underperforming. It's a lot to consider. We'll see as it goes on, but that's really going to be, to me, the catalyst. You wonder when you see a stock like that, where's the new money coming from? To a certain extent, I did see a story yesterday that said that 40,000 new Robinhood accounts bought Tesla yesterday. Well, that might have been where some of it was coming from, but it's not enough to push a stock like that in and of itself. Obviously, an S&P index inclusion would be enough to put real money into the stock. So let's keep an eye on this one. I don't envy the people who have to make the decision for S&P, because at some levels it's damned if you do, damned if you don't. It's a real conundrum for them, and we'll see where we go. We'll also see where we go in terms of trading today, whether the markets continue in their whether they find a rebound or whether they sell off. A lot remains to be seen. Have a good one, everybody. Bye-bye.